Okay, well, good morning, everyone, and welcome to the Investor Resources August Market Update. I'm Perry Sykes. Don Creech is with us this morning, also, of course. This morning, we're going to have a little conversation about anxiety and, and worry in the market, which we always seem to have. There's always something going on that doesn't feel quite right. And this morning, we're going to talk about what could derail the U.S. economy, which is moving along very well right now. Thank you very much. Um, we're thanking you because it is the U.S. consumer that is really driving things forward right now across the board. And sometimes it feels like no matter what, no matter what's going on out there, things things continue to be okay right now. Um, I saw this pop up in the real estate section of the Wall Street Journal. They had a story this past week about an apartment in Central Park, Manhattan. Used to belong to Paul Newman and Joanne Woodward, and their kids finally decided to sell it. That's not a bad view if you can get it, huh? That's a little bit okay. Um, they listed it for about $10 million, and it sold for 40% over asking price. Went out the door 14 million. Um, and the realtor was as surprised as anyone involved. And here's a couple of his quotes from the story. Um, if you were fine having a fantastic one bedroom, you were never going to find a better one than this one. What was crazy to us was how deep the market was. The irony, he said, was that the week of the showing took place. The weather in New York was terrible. It was raining every single day, monsoon like rain. He said it was the worst time to ever launch something like this. And it just shows that right now, none of that matters. So here we have a realtor that sells houses to the uber rich in Manhattan. And he was surprised by how much the uber rich people were lining up to buy this apartment. Now, it's true, this is an extreme example. It was Paul Newman and Joanne Woodward's place, for goodness sake, so it's got a little notoriety. But everyone these days seems to have an economic antidote about um, spending or costs being out of control. We hear it all the time. What'd that house go for? You go to a concert, beer's $25. All your friends are on vacation again. You go shopping for a new car and you have a heart attack. What do those new cars cost? And the cost of everything just keeps going up. But the news is consumers just keep consuming. Nothing has slowed down the US consumer to this point. We keep hearing stories about how stressed people are about money, but it doesn't seem to matter. Americans just keep spending despite everything. This is, U.S. retail sales. Look at this. Here back in 2000, here's the tech bubble bust. Doesn't look like much in retail sales, does it? Here's the great financial crisis. We can see it, but look at the recovery. Here's COVID. Nope, just keeps on going. It doesn't matter. No matter what goes on, the U.S. consumer doesn't stay down for long. This just keeps going up, and it seems that nothing can intervene for long. And the stock market has shown just the same level of resilience. There's been plenty of downturns this decade, plenty of places to lose money, but the market just keeps coming back with a vengeance. Here's that big, the big COVID drop, and bang, we just came back up. And with just regular market gyrations, doesn't matter how big or how sudden the drop, we get recovery, and it just keeps bouncing back right now. Everything just keeps going to new all-time highs. There's an old saying in the buy and hold world that all losses are temporary and all gains are permanent, and these days that's holding true. The number of insanely big corporations continues to grow as well. Nvidia, first company on earth to hit $4 trillion market cap. There's 8 other U.S. companies with $1 trillion valuations now, and just last week, Microsoft was the second company to hit 4 trillion. After Friday, I'm not sure they're still over 4 trillion, but they hit it along with Apple and Amazon, Facebook, Broadcom. and Tesla and Berkshire Hathaway are both hanging in there right at the 1 trillion mark. And these big companies just keep getting bigger. That's where a lot of the growth is coming from. That's where a lot of the resiliency is coming from. These big companies are really piling up the revenue, and they're still growing market share even as mature companies. It's an amazing thing to watch right now, and that's a big part of the resiliency of the U.S. market right now. Government debt, another thing that shows no no sign of slowing down. Um, This is a very long chart, obviously, back here to the 1800s. There was this huge run up of World War II, and look at debt wise, we're almost back up there again. We're in the neighborhood, um, and it just doesn't seem to matter. Um, this is public debt, and the CBO estimates that we're going to go significantly higher. We're going to go up to 160% of GDP is the current guesstimate, and no one knows where this is going. There's a good deal of volatility in this chart also, but again, relentless increase here going on, and it appears that that is going to continue. And again, another one of the dichotomies is for my entire adult life, we've been told that taxes have nowhere to go but up. Taxes are always going to get higher because of government spending and deficits. We can't seem to control that, so tax rates just have to continue rising. And yet, tax rate just keeps going down. We just passed another huge tax cut. And that bodes very well for consumer spending, for that consumer spending train to just keep on running right on time, because consumers are going to have more money, and there is no sign of a consumer spending slowdown right now. So with these tax cuts, that money is going to get dumped directly into the economy, and that's another big plus. It's a huge stabilizing factor. So the question is, what stops the spending train? What's going to cause the uber wealthy and everyone else with them to just stop spending, or at least rein it in? Um, when are consumers going to stop traveling? If you've flown anytime recently, there's fewer flights, but they're all full. When are people going to stop going out for food all the time, or paying for DoorDash, which is still exceedingly popular? When are we going to have the stock market have a slowdown that lasts longer than a movie preview? Every time we get a drawdown, it just bounces back immediately. Um, what's going to cause investors to finally back off on speculative behavior? Nothing yet. It seems like risk isn't an issue right now. And government spending, no slowdown in sight. And people keep talking about, a recession is going to show up. And, eventually it will, because that's what happens in economies. They cycle in and out. But we haven't had a true recession in more than 15 years at this point. So, what is it that's going to pop up that's going to really derail this economy? And quite frankly, right now, it doesn't look like there's a lot out there. Um, I don't want to just, cop out, but I mean, obviously, we don't know where it could come from. It could be a black swan event that no one sees coming, but that can never be discounted. And you don't know, what that may be. It might be an artificial intelligence bubble that pops. The AI is the big driver right now in tech again, and it's just exploding. And at some point, there's going to be a shakeout in AI, and things are going to contract, and maybe that's could initiate a recession. Not at this point, though. Um, Maybe it's a policy mistake by the Fed or the White House. Most investors believe the Fed just made another policy mistake by leaving interest rates unchanged again. But they get to review that again next month. So there's no long-term effects from that one. And we may think that they should have cut rates right now. They can catch up pretty easily. So that's not a huge fear hanging out there that the market's in any kind of trouble. Um, so that there's not a real driver you can identify that's going to trip this economy up right now. Um, the most likely answer is human nature will get us at some point. It always does. It seems at some point we become the problem. Um, Many times excesses will start to build as households and businesses become more and more comfortable making the risky bets, which we are right now. Boy, you want to talk about risk on. It doesn't seem to be a problem right now. And FOMO, the fear of missing out, takes over and drives out investors' fear. The market's still heading north. The economy seems stable, so people decide there is no reason not to be in the market with both feet. And it's that watching that the returns go by with you not in it is what really gets people to get out there, and that can lead to more leverage in the market. Some people are going to lever up and really go for bigger returns. People get complacent. Everybody begins to think, well, what could go wrong? This is foolproof, and here we go. And just like in the run up to the tech bubble, things have changed forever, and it's like, no, that's never the case. And then too much stability can lead to instability. Once everyone believes one thing is true, that trade gets top heavy. It gets top heavy. Everybody's doing the same thing, and that's when it can get knocked off center. But good luck guessing when that's going to happen. Um, and that's why economics is called the dismal science. Things do not always happen the way we think they should. In economics, you can never just do the math and get a repeatable result. It doesn't work that way, and that's one of the problems with the Fed. They're very academically driven, and with economics, you don't always pull lever A and the answer is always B. It happens every time. It doesn't happen that way with economies. There's too many moving pieces, and human nature gets in the way. People don't act the way they you would think that they would, and that throws everything off. So you can't just do the math and say, well, and here's what's going to happen in the economy. It never works out that way. I'll never forget hitting all-time highs in 2013 for the first time after the great financial crisis, and there were quite a few pundits out there saying, this market just reeks of euphoria. This can't be real. This is not something you should participate in. And they stayed on the sideline. They missed one heck of a move up because they did the math, and they said, well, this can't really be happening. This can't be true, but it did. And that's why you have to ignore sometimes all of the background noise and just look at the data and look at what's going on. um, the only thing we do know for sure is that cycles don't last forever. They always feel like they'll just keep on going while you're in them, but they never do. They're always going to cycle out, even if it feels like it is different this time and this change is going to be permanent. They're not. So this run, like all of them, will come to an end. We just never know when that's going to happen, and we don't usually get to even really know why. And that's why we just track the data in the market. We look at the money flow, we look at the returns, and you never try to make a prediction about where the markets or the economy is going. It's a fool's errand. You're wrong so often that it doesn't make any difference if you happen to be right once in a while. You're much better off looking at what is going on and let history kind of decide what was going on. Just look at what is happening, and that's got to be the basis of what your portfolio changes are. And we really try to do that. One of the strange things again right now, household balance sheets, they are in such good shape that when we get a real downturn, when it finally happens, there's plenty of money out there for individual investors to lever up and acquire some debt where we're way below where what the line has been. Our debt level is exceedingly low right now. So we are not likely to get blown out of this economy without a fight. People are not just going to roll over and lose everything that they built up. They've got some cushion here. The U.S. consumer is in a great position to put up a good fight if we actually get into that position where the economy is backing up on us, which I said we know we will. We just don't know when. So right now, regardless of the things that are going on around the world, we are in pretty good shape. We're looking pretty good. We're heading the right direction, and we've got some room here to push back if things do begin to go south. So until something significantly changes, we're in pretty stable ground here.